Talk about today's dollars and inflationary dollars. You earned 16 cents back then carrying your fucking fossil.
Money isn't the root of all evil, the fucking lack of it is.
Not money, the lack of understanding money.
When I put that into emphasis, when I realised that psychological effect and how it hit our family, I FTB all the fucking way.
You are now watching the Money Mentor podcast
With Graham Home.
Graham Home.
Well, everyone, the weather might be icy, but the housing market, red hot. I'm joined once again by our favourite data wizard, Dr. Andrew Wilson, who's here to tell us whether the RBA is finally going to stop holding our interest rate hopes hostage and if the auction markets are officially off the charts. Let's dive into what's making headlines in property this week and maybe, just maybe, pop the Prosecco for inflation figures. Doc, tell us, are we officially going to use the B word yet?
No, but we're getting closer, Rachel, and that B word is boom. And we had another big weekend of auctions last week. Last week, we had another big week of auctions. This winter market keeps on keeping on. And we're now starting to see more listings coming through, which we would expect once the holiday season is past. So we've really got a great springboard into the spring selling season. But we'll look at that a little bit later. We had some very important numbers through just before from the ABS, and that, of course, is the June quarter inflation data. The Reserve Bank told us at their last meeting, which surprised a lot that they didn't cut rates, not me, but that they were waiting for the June quarter data, which is the preferred data set for them. Of course, we do get monthly data results, which we also had released today, the June monthly inflation data. But the Reserve Bank focuses on that quarterly data set. Interesting to mention, Rachael, that the ABS are actually getting rid of the quarterly data set. So from November, we will only be seeing the monthly data set. So there'll be no more, is it the month that's more important or is it the quarter? It will be monthly from now on. And the first data set will be for October this year, which will be released in November, at the end of November. So the Reserve Bank is now coming to the end of its preference for the quarterly data set because that's no longer going to be available. And that's actually pretty good, Rachel, because we want to be looking at changes to the economy on a monthly basis, not on a 3-monthly basis. And we're a little bit behind the pack when we compare the measures of other advanced economies, which do look at monthly inflation rather than quarterly inflation. So finally, we've got rid of the old-fashioned way and we're into the monthly stuff. A few months to go before that, but we did get both released today. And this has been waited with bated breath, if I could say that the Reserve Bank did say that they were waiting for the quarterly data set before they decided on a cut. And that data has come out today and preempted by saying, as you said, crack the Prosecco, the champagne, whatever's your preference. It was some very positive numbers. And we really do look like we've got inflation finally under control. And those numbers, I would suggest, are almost an unequivocal signpost for an interest rate cut in a couple of weeks over August, which will be welcomed by the Reserve Bank. Of course, notwithstanding anything that might happen between now and then, but the inflation numbers are certainly very positive for an interest rate cut. So, as usual, and thank you for the intro, Rachael, we have the weekly podcast brought to you by My Housing Market. We are independent commentators and data providers on the housing market. We're all about the current state and future prospects of housing markets. And we bring this every week to you in conjunction with the great folks at Infinity. We are all about giving you the clearest information in terms of what's happening in the housing market, not just obviously prices and rents, but also those underlying drivers which determine the movement of houses and rents. So this is the last week of July. See you later, July. Hello, August from next week. That's the last week, the last month of winter is now upon us. So we will be getting warmer temperatures, about time, you might say, in most places. But we've certainly had some warmth in our housing markets over winter this year. And this week we're going to look at, as we preempted that latest June inflation data, both the quarterly and the monthly data. The latest regional house prices. We haven't looked at those for a while, Rachael. So let's see how the regional house prices have been travelling. And as usual, the latest weekly auction results. So Inflation is now certainly in the target range as the Reserve Bank has its brief in terms of monetary policy is twofold. Firstly, it wants underlying inflation. That's the inflation rate that takes out the volatile elements that can be affected by seasonal effects such as food. And its target range for underlying inflation is between 2 and 3%. So it feels that that's the appropriate target range. During cycles, we do have, when we move outside that target range, either higher or lower over a lengthy period of time or a longer period of time, people do say, or maybe they should change the target range. But they've held firm there, which I think is a positive. And also I think that 2 to 3% has a lot of technical positives to it. So the target range is 2 to 3%. The Reserve Bank has told us that it's not just about sort of getting back there 1 month, 1 quarter. We need to have a sustained period of inflation, underlying inflation within the target range. And we can now really start to say that we're getting there. We have been there with the monthly data, but now we're getting sustained data on a quarterly basis as well within that target range. So we saw the headline inflation rate. As I said, there's 2 specific measures, Rachael. One is the headline rate, which includes all the basket of goods or all the goods in the basket that the ABS measures as being typical of what we purchase. And that was down to 2.1% compared to 2.4%. So that's a low rate now. We're actually at the bottom end of the target range for headline inflation and down from the March figure of 2.4%. For 2.4%. Underlying inflation also fell from 2.9% to 2.7%. And from the Reserve Bank's perspective, of course, as I've mentioned, it's underlying inflation that is the focus for the Reserve Bank in terms of their interest rate decision making. So again, a very good result there for those looking for lower interest rates, and that's probably just about everybody. Well, not everybody, because some people do rely on interest rates for income as deposits, but certainly down from 2.9 to 2.7% continues the downward trend. And as I said, that's about as really as good as you're going to get in terms of a signal for the Reserve Bank. Goods inflation. And by the way, this is quarterly inflation we're talking about here. This is the Reserve Bank's preferred measure. Quarterly goods inflation. So we divide it into goods and services. And goods inflation has been the one that's dropped significantly on the back of over the past year or two, on the back of lower electricity costs. Of course, that reflects the government's subsidy that they brought in just over a year ago now for households, and also a steep fall in oil prices. That's also brought down goods inflation from 1.3% to just 1.1%. Now, that's the rate of growth of goods over a year. And that's actually we're getting towards very low levels here. Now, services inflation is, obviously goods and services is an alternative measure, or the other part of the measure when we divide into goods and services, what people purchase. And services have sort of been hanging up with higher prices because they reflect a strong economy, and higher wages, and businesses have had to push up their prices, particularly for labour, to cover those higher they had to push up their price for services to cover higher wages costs. But services inflation is also falling now, and that has been considerably higher than goods inflation, as I mentioned, for those reasons. And it's now down to 3.3% services inflation. And that's the lowest, Rachael, for 3 years for services inflation. So these numbers are all very positive. Even when you do the breakdowns and divide it into those items that have been positive for lower inflation and those that haven't been so good, we're now seeing it really an across the board easing in price as growth. And of course, that means that underlying inflation is now at 2.7%, consistently within the RBA's target range. And that's what they've said. We need to be consistently within that target range. It's not just consistently within the target range, it's falling lower as it moves consistently in that target range. So underlying inflation down from 2.9 to 2.7% over the June quarter. Underlying quarterly inflation remains within the RBA target range and is falling, and looks to be now sustained within the midpoint range, which the RBA has stipulated as a precondition for lower rates. And the bank has indicated in its last meeting that a satisfactory June quarter inflation result is a requirement for an August rate cut. So without actually saying it is really and truly going to occur, Rachel, I think we're pretty well set for a rate cut. And you can see there when we look at the chart in terms of underlying inflation on a quarterly basis, just how that has consistently fallen down within the target range since the peak way back in 2022, which was a result of those significant COVID stimulus packages that created too much demand and without the appropriate supply. Now, the monthly inflation rate, which is important too, because it gives us more of a real-time signal of what inflation is doing. So this is the month of June, not the June quarter, which of course covers April, May and June. This is just what's happened in June. And by the end of the year, this is the only results that we will have will be the monthly results. So good news again for the month of June. So it shows that the most recent inflation data is continuing to be positive. So in a way, that's another fillip for the Reserve Bank's interest rate decision if it is to be a cut. So annual headline inflation down to 1.9% compared to May's 2.1%. So monthly inflation is also falling quite sharply and is down towards what we would call low levels. Underlying inflation was also lower at 2.1% compared to May 2.4%. So as the Reserve Bank looks at that underlying measure, again, that reinforces the positives for an interest rate cut. There was more positive news from the electricity subsidy impact on electricity prices. Electricity prices fell by 6.3% over the month to June compared to 5.9% fall over May. So that's an improvement. But fuel prices were a little higher. Of course, we had issues at the beginning of June in terms of what was happening in the Middle East, and that did create a short-term spike in oil prices, which has resulted in still a fall in oil prices over the year, but down by 8% compared to a fall of 10% over May. And more good news for rents, that for tenants, rents declined again from an annual rise over May of 4.5% to an annual rise of 4.2% over June. So as we have with the quarterly data set, Rachel, we have the monthly data set now well ensconced in that RBA range of 2.3%. So if they're looking for a sense of what the future is going to hold, we know now that June is also showing us some very positive results. So that will be another positive for the Reserve Bank in terms of if they are thinking of cutting interest rates. So there's the chart. You can just see there that fuel costs were the only underperformer there with those major factors. In improvement there, electricity costs down 6.3 compared to 5.9 previous month. But fuel costs, even though they were still down, they went down as much as they fell over May. And electricity prices, an improvement there, 4.2% for rents, compared to rents, the annual change in rents over the year. And you can see there the total headline figure, 1.9% compared to 2.1%. Very positive figures, Rachel. And I would suggest that just about everybody who's asked will be suggesting there'll be an interest rate cut in August. And you can see there the monthly data very similar to the quarterly data in terms of that down, down, down and down for underlying inflation on a monthly basis. You know, markets have been waiting for this. There was some disappointment in because the majority of the market, whatever that is, and the majority of commentators were predicting an interest rate cut last month. It didn't come. I think certainly the minority said, and I was one of them, that they would stay on hold. So tick for me, but I think it really was just a pause for the Reserve Bank. And they said that to make sure with the quarterly data set, because they've consistently said that's the data set they want to look at, that it was all going to line up, even though I think we knew that it would, given what the monthly data had said, that the quarterly data would follow suit. And if anything, the June monthly data has been an improvement on what's happened over the previous month. So the momentum is there for, even lower inflation. So I guess, saying it's an absolute certainty, it's probably an absolute certainty. So we'll wait and see that result in a couple of weeks' time. Now, as I mentioned at the beginning, we're going to have a look at what's happening with our regional markets. We obviously focus mostly here on our capital city markets. Let's have a quick look at what's happened over the year to June with our regional markets. It's interesting to point out, as usual, that the regional markets, these are the major regions in each of the state, typically follow the sort of energy that comes out of the capital cities. We look at New South Wales here. Everywhere except Wollongong has recorded growth over the past year, and that's following some very strong growth in Wollongong. So just a bit of a pause happening there. But what's interesting, Rachel, is the local government areas to southeast Queensland have performed basically the best. Ballina and Tweed. Ballina up 10.7% over the year, and Tweed up 7.9%. Albury, which is the most affordable of the larger LGA markets, has certainly been in New South Wales a big performer over the past year or so, and that reflects its affordability advantages with that low median. And Newcastle also, which is probably still considered, not really maybe, but certainly its proximity to Sydney means it gathers a lot of the energy out of the Sydney market, and a lot of the confidence out of the Sydney market as well. But it certainly is a very strong regional centre, that Newcastle market. So again, everybody up over the past year, and follows, if you average that out, actually, Rachel, it actually averages out at the increase in Sydney over the year. And to sort of prove that in a way, we look at Victoria, and we know that Melbourne market, although it's certainly reviving now, certainly reviving the Melbourne market at the moment. It hasn't performed as well as Sydney over the past year, although it's starting to catch up. But we are starting to see, as part of that Melbourne revival, some of the regions are now reporting some stronger growth over the past year. So again, it's a really good signpost of what happens in the capital city market in terms of what happens in the major regional markets. Again, similar to New South Wales, the most affordable markets are performing the best in Victoria, Greater Shepparton and Latrobe, with the strongest growth. Bendigo, which is a strong regional centre, has also had some revival over the past year. But it's as we see with Melbourne, it's the higher priced areas that are struggling, continue to struggle, although some improvement there. Geelong, which is not so much as a prestige market, but more a suburban market, reflecting what happens in Melbourne, because it is obviously proximate to Melbourne. But the Mornington Peninsula particularly is a particular prestige market, as is the Surf Coast, which is starting to recover now. The Surf Coast down by just 1.9%, and Macedon Range is the underperformer there by 8.4%. So not as strong as New South Wales, because that Melbourne market hasn't been as strong as Sydney. And again, that relationship holds firm, and particularly in the Queensland market, Rachel. And when we look at Queensland, you can see there that all the major LGAs have recorded growth. And at the top there, again, the affordable markets, Mackay, Townsville and Rockhampton, are just booming, above 20% prices growth. After lengthy periods, particularly Townsville, of quiet buyer and seller activity, confidence is back in the Townsville market, and it's continuing to grow. Gold Coast, which has been in boom mode for a couple of years now, is still recording higher than 10% growth over the past year. Noosa is the underperformer. It is a smaller local government area. It has had a very strong performance over the past couple of years, so just easing to some degree. But I think it's remarkable, Rachel, just how consistent the growth is in those Queensland local government areas, which just shows you that it picks up the energy and the confidence from the capital city. And also, when we look at Tassie, we know that Hobart has been also in revival mode, and we can see that reflected in the major Tasmanian local government areas. Hobart local government area, Hobart Council up 8.6%, reflecting what's happening in Hobart generally, the capital city market. Clarence up 6.1%, Glenorchy up 4.5%. And Launceston, which has sort of been the most consistent performer, is now at the bottom of the pack, although still growing. So it just shows you that those other markets, particularly Hobart, are in catch-up mode after a quiet period. And again, it reflects what we've seen in that Hobart market, which is the capital city market, which has certainly been performing strongly this year. And similarly with Darwin, the capital city, has really had a surge over the past 12 months. And we can see that when we look at the local government areas in Darwin. Darwin local government up by 1.6%, and Palmerston, as usual, is just churning along, up by 9.1%. So it's always good to see what's happening in a relative sense in terms of the regional centres. Rachael, these are the major regional centres, and it's always interesting to see how they follow generally what's happening in the capital city markets.
We're still seeing quite steady growth with those regional markets. Is this still the seed tree change effect, or are we seeing new drivers at play here?
I just think it's rising confidence. Yes, there's part of that, particularly in Queensland. But there's the momentum now, of course, reinvigorates because of lower interest rates. And this is all part of the story here, of course, just like with the capital city markets, lower interest rates improve affordability, increase confidence, more buyers come out. But there's just that little bit of a lagged effect that happens in regional markets when we compare them to what happens with the local capital city. So we can expect more of this to come, with even the February and May interest rate cuts still not, having their full effect, I think, on regional markets, and still to come. And as we're sort of predicting at the moment, sort of sensing that there will be another interest rate cut in August. So it's looking very positive for regions to continue to grow, and we are seeing that across the board here in terms of overall growth. But that's what we're seeing with our capital city markets as well, that most are in positive territory. In fact, I think all of them over July will report positive growth for house prices. So let's have a look at the latest weekly auction results. As we've already alluded to, big weekend again for auction results. This has been a remarkable winter market. Auction results have not just stood up, they've actually increased. And usually it's a distracted period of the year. So July has ended now, the auction market, winter, and we can say that B word because we're not going to say it's a boom, but we're certainly approaching boom time conditions. And there's some real consistency there amongst our capital city markets. It's not just Sydney, it's not just, Adelaide that have been strong performers, which we expect, but it's really all our auction markets are now performing well. Soaring clearance rates, and they're now approaching boom time conditions. And we'll start to see that activity in terms of listing numbers accelerate now. The holiday period is behind us, and people will start to really get that vibe, particularly if we get an interest rate cut. That will just accelerate the drive towards the spring selling season and the end of the year type decision making that occurs through spring. And we will see more homes coming into the marketplace as usual over the coming weeks. But there's no doubt there's a very strong appetite amongst buyers for properties across the board. Let's have a look at the results. Sydney numbers up as would expected. Now we're moving through towards the end of winter. Clearance rate in Sydney, another strong clearance rate, 77.4, higher than the week before, higher than a year ago. Melbourne has done it again, Rachael. It now has again led all the capital city auction markets with the top clearance rate, 78.1%, highest clearance rate in over 2 years for Melbourne, above where it was the previous week, even though we had 100 more auctions in Melbourne, and well ahead. Look at that, 65% a year ago, 78% now. And we always use 80% as a benchmark for that B word, boom, and we're just under 80% in 3 of those capital city markets. So as I said, I think we're approaching boom time conditions now, so it'll be very interesting to see what happens over the next few weeks, particularly given the likelihood of an interest rate cut. Brisbane also had a big result, 61.4%. That's a high result for Brisbane, despite a surge in listing numbers and higher than where it was a year before. Adelaide's certainly starting to pick up again and looking like the Adelaide of a year ago, 77.2% clearance rate. And Canberra, we can really say now that Canberra market is on the move. It's been sort of struggling around the mid-50s for most of the past year, but over the past month or two, it's certainly pushing up to the mid-60s and maybe even a 70% in prospect for that Canberra housing market. Just looking at the trends, you can see the pickup in the Sydney market this year and over the past month, Rachael, and tracking higher than a year ago. Melbourne is really quite spectacular in terms of how it has grown this year compared to where it was a year ago and the end of last year. So we can certainly say that Melbourne market is now up and about and offering some good opportunities given the subdued nature of the market over the past couple of years. Still offering good opportunities because there's some upside for growth potential, in my opinion. Brisbane also, highest result for a number of months over July so far, and tracking higher than a year ago. and also Adelaide. It's the same story with each of our capital city markets, Rachel. Shows you what lower interest rates do. Really started to pick up now. Auction activity, and of course we know that will eventually translate across the board to higher prices. And that Canberra market, again, these charts all look the same, by degrees, and there's Canberra now picking up. Again, it just reinforces how important it is to activity in our housing markets, lower interest rates, and they create their own momentum, and we might be starting to really see some FOMO coming into fear of missing out, coming into the equation through that spring market, which will push prices up even higher. So if you're looking for the latest auction results, you can get the snapshots every Saturday night at 6 o'clock on my LinkedIn channel, Doc Andrew Wilson, LinkedIn, full national report, around about 9 o'clock on Sundays, which includes the regional breakdowns for Melbourne and Sydney, and the top 10 sales for each of the capital city markets under the hammer over the week. If you missed the latest national auction market report, the weekly one, there is a QR code. You can get a copy of it there to update your insights into the auction market, which is a very important indicator, as we've said, of activity. And just to finish off, Rachael, we offer, as usual, to our viewers and listeners, the great My Housing Market Suburb Data app. Yes, we focus here on capital cities and sometimes regions, but you do need to know what's happening on the suburb level. Well, you can do that with this fantastic app brought to you through My Housing Market and in conjunction with the good folks at Infinity. There is a QR code and a link to get hold of that app. It does give you the asking prices and rents for every suburb that has data in Australia. It's a very handy insight if you're looking at what's happening at the suburb level. You do need to access this through Infinity. It will provide you with a password, but it's a great app. A lot of people are using it now to provide those consistent real-time insights into what's happening in suburbs, in the housing, in capital city, in all our suburbs in Australia. So there's a screenshot. You can filter it for price or rent. You can filter it for either the capital city region or the outside capital city region. We're looking at Blacktown here as an example. You can also filter it for house, unit, or townhouse, and also the number of beds. How good is that? And not just the median asking prices. So it tells you what agents, what sellers are pitching in terms of their expectation for prices. It also shows you the low and the high. So you get the boundaries in terms of what the market's asking right here and right now, and the number of properties for sale as well. And you get exactly the same thing for the rental market. So a great one there, Rachael. And for investors, we also filter the same regions for the top 10 suburbs in terms of their level of yield. So yields is the return you get over a year for the rent based on the current asking price. So it gives you that, not just the current yield, also the vacancy rate, the number of properties for rent, and the number of properties for sale. And if you click on the link for those suburbs, it'll actually tell you where they are. It takes you to a map of that particular suburb. So that's a great little resource for those wanting to accentuate their decision making with all the best and latest data possible. Next week, July house price data. Wow, we are looking forward to that one. It's happened over July with all those strong clearance rates. June home building approvals have come around again, and as usual, the latest weekly auction results. If you've missed today's show and you want the data from it, there is a QR code for you. So we're out of time. We're not out of luck though, Rachael. Good numbers coming through for the housing market, particularly, and for mortgage holders, because I think that they'll get some good news in the next couple of weeks in terms of some relief from interest rates, and also, of course, the fact that prices are lower is also relief for all of us, because prices have been, very high for some time now. They're still sort of high, but they're not growing at the rate that they used to. So some welcome relief, Rachael, this week.
Yeah, definitely.
So yes, let's
it's
get
going to be cheaper to lend money. So
let's get those bottles out.
Yeah, that
Oh, good.
Prosecco.
All
Yeah,
right,
well,
so
it's going to be cheaper to lend money, so we're definitely going to see it pick up. I would say we're seeing that boom time
100%.
energy, lowercase b,
Yeah.
Doc, lowercase b energy in the middle of winter. But thanks again, Doc, for translating the wild world of economics
My pleasure,
into
Rachael.
something we can actually use. Whether you're planning to sell,
And
buy,
that's important.
exactly. Whether you're planning to sell, buy, or just being the most informed person at your next dinner party, this data has you covered. Until next week, stay warm and property market curious. Thanks, Doc.
See you, Rachel. All good.
You're fucking gone. See ya.